Good morning, all. What I wanted to go through today was, um, everyone's using volatility masks to trade the US 30 Open. I think quite a few people are starting to use it to trade other volatile news events. And what I wanted to explain today was using volatility master to trade at times that don't coincide with red folder news events. So just, in other words, sort of all-day trading, not specifically in relation to any specific event that's going to cause volatility. So I'll share my screen and have a chat about that. Okay, so I'm going to bring up the settings for US 30 that I'm using. And don't worry about the daily profit target. That's just set very low because I'm pretty close to passing my prop firm challenge, and I just need to make that much more. So it's set to cut out as soon as it makes that. Also, these settings that I've got on here aren't the default settings. They're just some other settings that I'm starting to play with that backtest quite well. If you want to know what these settings are exactly, I'm happy to share any of the settings you see in any of my videos. So just sing out if you want them. But just because I'm testing them doesn't necessarily mean they're the definite ones you want to be using. And also on the note of what settings to use, sure, the settings that I share, the default settings, any other TVL files that I share, template files, they're settings that I use and they work and you're more than welcome to use them, but I wouldn't limit yourself to only using those. When you got the time in that, you should very much, assuming you want to take this seriously, is spend the time to delve into back testing and all of that. And that way you can tweak and fine tune the settings to suit your own trading style a little bit, whether it'll be volatile events, red folder events, or just other times that suit you personally. But anyway, what I wanted to show you on these settings is what I'm doing on the US 30 Open is I'm trading the 1 minute time frame. Now, just reiterate, it doesn't matter what time frame you have the actual chart on, but I have the initial trade set to 1 minute time frame and the stack trade set to 1 minute. That's what I'm doing on the US 30 Open. And I'm using a 1% risk setting, so risking 1% per trade. And I was playing with this. Normally what I would have is a daily max loss of 2.2%. Why 2.2? Simply because it's just a smidgen more than twice the risk percentage. If I just had it set at 2, then I might lose just a smidgen more than 1% on the first trade, and then I wouldn't have enough left out of the max loss allotted amount to take out a second trade. And the whole idea between these ratios is I want to have a max loss great enough to allow the software to take out at least 2 trades. If I have 2 losing trades in a row, then it's going to stop trading, but I don't want it to stop trading just because I have 1 losing trade. And then I've got the profit goal set at 5%. It's at 5% because that's, on a 1% risk setting, that is, that's the profit goal that back tests the best. And this is simply because we're trading directly after a volatile news event and we're trading the 1 minute time frame. So there is a reasonably good chance that the first trade may end up being taken out before. So what the theory behind it is after the volatile news event, the volatility dies down, and then based off that news event results, or the US 30 Open, once it opens, after the volatility settles down, we're hoping that the market's going to start trending in one direction. But sometimes that first trade may occur before the real trend starts. So you might have one trade that looks like it's going to start trending down, so it does a sell, but then pretty quickly retraces. and then it continue as a buy trend for quite a while. So the first one may go the wrong way sometimes, so I need to allow it to have two. But the first one is quite often good as well, so you can't afford to miss it either sometimes. But anyway, that's what I'm using, and that's what I find back tests the best anyway, and that's what I've been using for quite a while. But you know, you can experiment. You can experiment with the times. I'm starting 10 minutes after the volatile event. You may want to experiment with starting later or something like that. But anyway, this is what I'm doing when I'm trading other pairs, but specifically trading them after a volatile news event. I'm doing a very similar thing. I'm trading the 1 minute time frame, but I'm allowing it to have two losing trades in a row before it cuts out. But when I am trading a pair, we'll have a look at the settings for pound USD. And these are my settings just to trade other than a volatile event. So I've got it set to just start at 300 minutes after the open, which is midday my time. It's starting the same time, stopping the same time every single day. So it's no relation to a red folder news event or anything. It's just starting at midday and trading. What I'm doing in this case, though, that's different to my US 30 Open and other red folder news event settings, is on this particular pair, I'm basing the initial trade off a breakout of the 15-minute time frame. So being a higher time frame breakout, it's a more definite breakout. The stack trades are still 1 minute though. And risk setting still 1, but I have my max loss at only 1.1. So I'm only allowing it to have, you know, if that first trade for the day is a losing trade, that's it. It stops trading until the next day. So that's the real difference there, is all day trading on the higher time frames, I'm only allowing one trade. You know, if that initial trade, that first trade for the day goes the wrong way and you lose, then it stops for the day. And depending on the pair, my profit goal is just set to whatever back tests the best. In this case, it's 2.6%. So that's that. I'll just have a look at one other one. So let's just have a look at gold. This is my gold settings that I have set. I also have it set just to start trading at midday every day. This is trading gold just all day, not in relation to a red folder news event. And I have, so I did have this one set for a red folder news event last night, but normally I'll just have it set for the initial trade to be 5 minutes. Okay, so when I'm trading it just all day, just because I want to, not because there's a volatile event, the initial trade is going to be based off a breakout of the 5 minute time frame. Now, if I'm going to be trading gold directly after a volatile news event, then I will still use it on the 1 minute time frame. But for all day trading, I'm using it on the 5 minute, and 1% risk and a prop max loss of 1.1. So also I'm only allowing a single trade loss before it stops trading for the day. Whereas if I was trading a red folder news event, sometimes depending on how volatile that news event is and how long I expect there to be a trend after, but generally I'll use a 1% risk setting, but have 2.2 here to allow two losing trades before it stops trading for the day. So that's the main differences to my settings when I'm trading all day as opposed to red folder news events. The higher time frame breakout and allowing two trades instead of one, like one trade instead of two. So that's really the only differences with the settings. It's not depending on what pairs and when you have your time set to trade, though, it's not going to be as hands-free as trading US 30 Open, because if I have, quite often there's a US dollar, because this is gold against the US dollar. We have to be aware of red folded news events on gold. So I'm just trading all day, nothing to do with red folded news events, but I have to ensure that I don't have any trades open when a red folded news event occurs. So no matter what you're doing with trading, Forex trading particularly, you need to know the economic calendar. You need to know when red folded news events are occurring. When I'm trading Volatility Master all day, I need to know when red folded news events are occurring so I can ensure I don't have any trades open when that does occur. And that may involve closing some open trades and turning off auto trading until that news event's finished. I'll go into why in a moment. When I'm using Volatility Master to trade directly after a red folded news event, I obviously also need to know the economic calendar so I know when those news events are occurring so that I can set the times to trade directly after that news event. Now, let's just have a look at what I've got on the chart here. Okay, this was an FOMC news event, which is in the wee hours of the morning for me, so I was asleep anyway. But that news event occurs on this first big candle. Okay, so what happens is if the markets, we might have, for example, the bottom of the range might be there. And then when the market breaks below here, it's going to take out a sell order. But then the news event occurs and it just tears off the wrong way. So you would have hit your stop loss and you would have taken a loss. Of course, that news event could have pushed the market the other way, in which case you may have hit your take profit. That alone isn't a huge issue because sometimes that'll work for you, sometimes against you, but average out, it's probably okay. The real issue arises in the fact that this market moves so fast that, let's say you have your stop loss set here, but because the market's moving so fast, it'll hit your stop loss here and start selling your position, but the market may be right up here before it actually finishes closing your position, meaning that you've taken a much larger loss than what you had your stop loss set at. And this is what they call slippage. That's one issue. Another issue, which can occur over the weekend, so it's best not to carry trades over the weekend for the same reason, and applies to the most volatile of the red folded news events like NFP, CPI, and that, is that not only will the market move so fast that it sort of powers straight past your stop loss, it may actually, this candle might finish here, but the next candle may start up here. So you've got this big gap in the market, and that's they call that gapping. And that next candle may start way above your stop loss line, meaning it's still going to close your position, but it's going to close that at a much larger loss than you were expecting. So the issue with having trades open when a red folded news event occurs is you could get slippage or gappage occurring, which means that instead of, you might have your stop loss set to lose, say you're only risking 1%, but in this case you may lose significantly more than 1%. And I have seen personally, before I learned this lesson the hard way, times when you might have your stop loss set at 1%, but you end up taking a 10% loss. Okay, so that extra loss from slippage and gappage can be significant. So it's just really not worth the risk. So what I would be doing here is, I should know that there's a red folded news event occurring here, and well before well before the news event, I would, turn off auto trading and then close any open trades that I have, um, just to make sure that I didn't get caught with gappage or slippage. Okay, so that's the issue. Um, if normally, let's say for example, normally I might start trading pound USD at midday my time, but there might be a red folder news event for GBP at, let's say, 2 or 3 o'clock in the afternoon. So 2 or 3 hours after the software would start looking for trades. In that situation, you're better off just not trading until after, because it might just take out a trade and that trade may not get into profit before that news event, which would mean you're going to have to close it as a loss. It may not be a huge loss, but it's still a loss. So you're best off just doing whatever you can to make sure you don't have a trade open prior to a news event. All right, I think that covers most of it. One other quick note, generally, although trading all day with those settings does work out, quite good, to impressive long term, the actual win rate is a lot less than with the US30. A lot of my back testing on the US30 shows, 75, 80% win rate on the trades, whereas trading gold all day like this, my back testing shows a win rate of only a little bit over 60%. So a much lower win rate, but still, significantly, probably fairly similar profit long term. But what that means is you're going to see runs where you have several, more days in a row where you lose than you would on others trading red folder news events. And specifically because you're only allowed to have one losing trade and then it's going to stop trading for the day, you might take a loss. The next day you might take a loss, and you might take a loss and take a loss, and it's not looking too good. And that's another reason I urge everybody to get involved in doing their own back testing, because that sort of shows you how, the results you would have got for trading the last 6 months or 12 months, which will look impressive. But if you break it down, you'll see there are runs there where you have all losing days for a week or more, which means it doesn't look very good at all. Long term, it looks good, but that particular week looks terrible. And it's important to be able to see that long-term average, because one of the hardest things for people to get their heads around with trading is copying those losses. Maybe, taking a week in a row where you take a loss every day for a week, that's hard to stomach, but back testing helps you see that that's all part of the process, that even on an extremely good strategy for a great long-term average, you're still going to have those really, really bad runs. They are to be expected. They are going to happen. Don't even wish that they don't, because they are going to happen. You need to come to terms with that so that you can feel you're not going to like them still, but know that it's part of the process, and they're coming, so they're not a shock. All right, guys, I'll leave it to you on that one, and I'll talk to you later.